Hello everybody. So the incredible shrinking inventory, I think most people will say this is unexpected, but I don't think it should be terribly surprising. And instead, I want to talk about what's going on, but what I think this means for the next few months in real estate. As always, this is not necessarily a prediction, just kind of an exploration of what I think some of this stuff could mean. So let's go ahead and get started here. Yeah, let's do it. My name is Stephen Meade with Domicile Real Estate, where we are on a mission to help California's renters become buyers. And this is our Southern California housing market update for November 4th. I cannot believe it, 2025. So I'm going to go ahead and I'm going to open up the screen share here because I think that what we're seeing really is an opportunity for people to get a little bit of information about the future. And I've been spending some time thinking about that myself, what I think is happening. So our very first chart here that we're going to take a look at is that total active listings. So our blue line is under $1 million. Our red line is $1.2 million or $1 to $2 million. So if you look at our red line here, right, we were just under 5,000 units this time last year, and we are just over 5,000 units. And I think if you contrast that to the last couple of years, I mean, this is probably the first time in a little while where inventory has not really grown year over year very much, especially in that $1 to $2 million category. The other thing, and I've talked about this before, but it's really apparent right now, is if you just kind of take a look here at the shape of this graph, right? Like, I mean, look at how early our inventory fall started to happen in that 1 to 2 million category. I mean, inventory peaked in July and it's been on a downward trajectory really ever since. If you look under $1 million, I'd say here we're at what probably, 8,700 units or so, and we were just under 7,400 units. So, I mean, yes, it's still up, but again, take a look at that trajectory. Inventory was even still kind of bouncing around and rising. This has been on a decline since the end of July. I mean, this is just a little bit of an unusual pattern. And what this tells me is where do I think we're going to end up at the end of the year? So historically, our lowest inventory in our Southern California market happens really right in that Christmas to New Year's timeframe. That's typically when we have the least amount of homes or number of homes on the market. Where do I think that number is going to compare this year to last year? I think there's a chance we may actually have less inventory when we start this year versus where we were at or start 2026 versus where we started in 2025. That would be kind of interesting, but I think that's a very real possibility. In fact, I would say it's even likely for our $1 to $2 million category, and I think it's definitely possible for our under 1 million category. So if you look here, what would that mean? It would mean we'd probably be kind of in that, maybe a little under 3,000 units of 1 to 2 million and a little over 5,000 for under 1 million. So we'll see if that turns out to be true. Okay, moving on. Our new listings, right? This is another sign of things to come. If you look at this, I mean, look at how this has taken a dive in that 1 to 2 million category. We're in fact on pace for the number of new listings that we were at last year. And under $1 million, we are again pretty close to where we were at last year. And those new listings are starting to taper off as well. So if you've got inventory itself really starting to fall and you've got new listings falling, what does that really bode? Well, that is why we believe that there's a chance under $1 million will be at less inventory than we started the year with. And for 1 to 2 million, I think it's even likely we will be less. So if we take a look at our new escrows, right, this is yet another interesting data point for both under $1 million, which is barely a little bit more new escrows than we were at this point last year, right? That's new homes being sucked up by buyers. But if you look here at 1 to 2 million, we definitely have more escrows going this year than we had last year at this point in time. And so if you take a look at that, also look at the shape, right? A definite downward trajectory on both of these and really almost flat when we're looking at it for this year. So again, more data that supports that idea that that run up of inventory is reaching its end, right? We've gotten as much as we're going to get in terms of that inventory growth. And to be honest, it's still a little less than what a normal market would have. Absorption rate. This tells another interesting story. Look at this number swinging for both under a million and 1 to 2 million towards 80%. That puts it firmly in a seller's market. Once you hit that 80% number, you are definitely in a seller's market. And for our 1 to 2 million category, we have not seen this balance of supply and demand really since, gosh, at any point this year. We haven't seen absorption rates this high, and we are nearing our high point for under 1 million. Our other previous high point was back in September. Remember that under 1 million price category, very sensitive to interest rate fluctuations. If we look at our closed prices, again, this is taking a look in the rearview mirror. We are at pretty much flat, a little bit of an increase in both the median and the 75th percentile, but overall kind of flat for the year. Our big stuff happened in the spring and a little bit down on this 25th percentile. I think what's remarkable to me, especially below this $1.5 million level, is just kind of how steady these have been all year long. Now, if we're looking at are still active after 14 days on market, that number is flat or even starting to go down, definitely off our high points, but not at the levels we're at spring. Now, remember, this chart, when the number is higher, that is a less competitive market. When this goes down, it becomes a more competitive market. And if we look at our close to list ratio, right, that is in that high 90s. That is a normal number for this. Do I think this number is going to go up in the spring? Yes, that is typically our pattern, is that January, February, March, this number will accelerate. Obviously, that is dependent on interest rates and a whole lot of governmental factors. Gosh, I hope we're not still in a shutdown by then, but who knows? If we look at our days on market for new contracts, this is kind of interesting. This number is going up, and you might think that this is alarming. I don't think it is, and I'm going to tell you why. You're going to look back at this point last year, and these numbers both accelerated, right? Under a million and 1 to 2, that days on market number accelerated. But I also think there's another explanation for this. If we are seeing that inventory number starting to go down, I think we are seeing buyers and sellers alike re-examining their situation. I think some sellers are saying, I don't want to have this house on the market over Christmas. I'm going to drop the price to get it sold. So obviously, if that is a older listing that gets a contract, that will raise your days on market for new contracts. The same thing is, I think you've also got buyers who are not happy with the amount of inventory, expecting new homes to come up, and they are re-examining prior available options and maybe going back to them. If we look at our three-way chart here, right, again, we always examine how close this yellow and the blue line are together. That's your payment index versus your rent index. Kind of surprising to see such weakness in the rental market. That one is a little bit surprising to me. As you can imagine, we had a huge jump in the rental market. If you look at the dates here, there was an event here in Southern California going on that really sort of spiked that rental market. But that rental market's really been steady, or actually a little bit on the soft side. But you also look at this payment index coming down as well. I think that has put some would-be renters back into buy mode, and that has also kind of affected that single-family rental market. Meanwhile, inflation, is just marching along here. I think something fascinating is look at how close this CPI line is to this rent index line. So I know the popular narrative out there is that rents are just completely out of control. They're outpacing inflation. They're outpacing people's wages. The reality is that simply isn't true, at least when we're talking about single family home rental indexes. We're seeing that really even since this is indexed back to June of 2018, these numbers are not that divergent from one another. And this is over a 7.5-year span. So, kind of think about that one for a moment. And if we look at our prevailing mortgage rates, I think that's driving part of this. We're seeing just this sort of, really this year has been a just slow reduction in those interest rates. I know people were hoping for big, huge changes. And by slow, I mean, we went from kissing 7% to really down close to that 6% level. Anyhow, that's all I've got for you this week. Thanks so much for watching. Obviously, if you'd like to have some of our expertise, if you'd like to use our expertise, knowledge, and experience, we would love to represent you on the purchase or sale of property here in Southern California. You can definitely reach out to us via the contact methods below down in the description. Don't forget to like, subscribe, and hit that notification bell, and we will see you again real soon.